Welcome to readtheticker.com. Another Wyckoff blog is called Wyckoff Power Charting by Bruce Fraser of Golden Gate University fame. In this latest blog post called Spring into Action, he has made a post talking about stepping stone reaccumulation, and here we have a nice picture of Apple Inc. November 2014 with a nice continuation pattern, buying climax, automatic moves, spring action, breaking through resistance, and a continuation of price. Some good volume, demonstrating that. Now, I just wanted to show off how RTT readtheticker.com, via its technical tool called RTT Steps, can help find patterns like this within the market. So we go to the website, readtheticker.com. Here we have the same Apple Inc. chart, and here's the pattern that Bruce has demonstrated. Once again, and the indicator you see on is called RTT Steps, right? The setting is 110 daily, 110.1, 128 bull, with a reaction line of 65%. Okay, so this was 2014. If you want to find other tight consolidation patterns to investigate of reaccumulation for higher prices, readtheticker.com has a swing tool called Swing PNF Wave. There we are, Swing PNF Wave. And part of this tool, I'll just scroll down, we have step BTW, or between 80. What that basically means is that it looks at RTT steps over the last 80 periods and counts how many closes are within a step. So if it's a blue count, that means 34% of closes are within a blue step. Okay, so it's 34% of closes are within the blue step. Now we want to find a high continuation, so we might just type in, so obviously we've got 80 periods, 130, 200, 300. So here we have, of all closes in a step, which is measured at the same one I just quoted, where the step is 110.1, 128, it says 70% of all closes are within the bull step because it's blue. Here it says 74% are within the bear step because it's red. Now let's just show this visually. So let's go, let's put above 90, I suppose. This means we want to 90% of all closes in a particular the stepping indicator over the last 80 periods. So it's pretty tight. Here we have GE. I'll bring that up. Okay, so the same indicator as I've got it logged in here somewhere. Here it is. Okay, this is the same indicator. It's 110.1, 128 bull. And GE is showing in the last 80 periods, all of the closes are within the step. So this shows that we're scanning for tight patterns in a stepping formation. And as we can see here, we've had a new break into new ground with the steps. The steps are going higher. Where has it gone? Oh, whoops. Wrong scroll bar. As you can see, there's quite a lot of volume here, so there's a bit of buying climax going on. It's come down, a bit of a move. Hasn't made a little bit of a new high, so I'll be a bit cautious about it. Now we want to watch and see what happens. If it holds above that reaction line of 65%, it's strong. If it doesn't venture down to the below 65%, it means the reaction is poor. So it means there's demand if the price reaction stays in the upper range. It's always best when a price is going up that the stock price holds to the higher upper range of a band. Okay, so that is another pattern you can study, just like the Apple one. We can actually go scan for wider. Let's have a look We've got 90. We want a tight, the last 80 steps we want to have 90% of closes within a bullish step, but let's go, we want to have 90% of the last 300 bars, the close in the step. And we want to let's pick up S&P 100, how we do that? Okay. So we get a lot more stocks, hang on. This means that all these stocks have a lot of closes within a bullish step. Okay, there's quite a few of them, because we are, after all, in a market that's going up. And we might also say that if you're an option trader, we're tight spreads. So spreads between the bid and ask. This is option spread rank. So we want low spread risk. So give us these stocks here. And so this is our trends. We've got some really high trends here. Good trends. Starbucks is always in this scan, quite frankly. But let's have a look at Starbucks. Give it due respect. Quite frankly, Starbucks has been trending in a solid manner, tight steps for some time. So it should come up in the scans. Okay, here's the same indicator, 110.1 to 128. And we scroll over here. As you can see here, it's a nice tight sideways formation of a couple of closes outside the band. Down to the low end, I'm not so happy that it's gone past the reaction line. Actually, it's gone past the reaction line. This is the third time. And let's check the volume. Some solid volume came down there, but it's been able to hold. We also have to take into account how far the stock has travelled over time, so it's very, very, very extended. So we might scroll down there. You might consider this as, okay, here's the history of the step. As you can see there, it's been very tight. In truth, this is a cause building. So if we get a spring action here, a low volume spring action, so we are getting it right now actually. Low volume, see how the volume's quite high for the week? Previous 3 weeks, those 3 big negative bars, those are weekly volume bars. So it's quite high volume, and now the volume has dropped. So the selling seems to have subsided. So I would watch this next week to hold support at 55, and I would consider looking at a bullish position. But we would really want to see it get over that reaction line, and the reaction line is simply 65% between. Sorry. Where are we? 65% between 64 and 56. So it's 65% drop between there and there. For example, the reaction line ticks up there. As you can see, the reaction line, the price doesn't go anywhere near it until it starts consolidating with a bit of a shock here. So we really want to see it hold there. So this is how you can find similar reaccumulation test patterns that you saw in the original Bruce Fraser Wyckoff blog. You can scan the PNF wave with the RTT steps to work out how many closes within a step. If you go for a higher close count, that means the step is dense with closes, and it's more likely to be a tight forming pattern, and one that you can investigate for springs and what have you. Thank you for watching.